They say that the Stocks and Shares ISA is the UK's cheat code to building wealth, because what other ways do we have in the UK of building such wealth without having to pay any tax? In the Stocks and Shares ISA, every tax year you can put a maximum of £20,000 towards your investments, and it can grow indefinitely. For example, I have a Trading 212 Stocks ISA portfolio worth over £120,000. Here is another Stocks and Shares ISA that I have that is worth over £22,000. And here is another Stocks and Shares ISA that I have that is worth £389. So by investing for my future now, hopefully in 20-30 years, I can have a sizable portfolio that will allow me to have more choices in life, and I can withdraw this money tax-free. Everything within a Stocks and Shares ISA is basically sheltered from tax. This includes capital gains tax, dividends tax, and even interest on your uninvested cash. So in this video, I'm going to go through the benefits of having a Stocks and Shares ISA and my experience in investing within Stocks and Shares ISAs for about 5 years now. The main platform that I'm going to be used to display this is Trading 212. And if you would like to sign up to Trading 212 and receive a free fractional share worth up to £100, all you have to do is to press the 3 horizontal line menu over here. Now scroll all the way down until you see the section Use Promo Code. And in this section, just enter my code JUBAIR and you should receive a free fractional share. So like I said, this is my main Stocks and Shares ISA portfolio. Numbers can really be deceiving, and if you look at my total return, it does say plus £20,000. That's actually not the complete truth. You can see in September, my portfolio value was £45,000 because I deposited 2 lots of £20,000 throughout the past 2 years. And then I did an ISA transfer. As you can see, it went up from £45,000 to £105,000 in a month. This was a transfer of £60,000. So in total, I have deposited within these ISAs about £80,000, and the rest is gains, which I'm really happy about. In the earlier years, as your money compounds, you're getting less on your investment, but usually once you surpass the 6-figure mark, so that's £100,000, each 10% is quite a lot of money. It's £10,000, and I've found my net worth to kind of snowball after reaching that big number. So let's discuss why you would want to have a Stocks and Shares ISA. Now, if you just started investing and don't have an ISA anywhere else, then it's a no-brainer to start within a Stocks and Shares ISA, because any gain, remember, like I said, capital gains from realizing a profit on your investment, any dividends received from any companies you hold, that's tax-free, and also the interest on uninvested cash, that's also tax-free. For example, on Trading 212, I currently have a lot of cash, £118,465 in cash, and that is currently generating me a daily interest payment of £12.87. The interest rates around the board are going down quite fast, but even at this lower rate, £12.87 is quite a bit of daily interest to get. Personally, I would never recommend holding this much cash in a Stocks and Shares ISA. For me, the whole point of a Stocks and Shares ISA is that we can pick our own investments. I kind of have been doing this. It will take a separate video for me to explain this, but essentially I can invest into stocks and shares whenever I want. So within a Stocks and Shares ISA, I can buy company shares, for example, in Apple, Microsoft, or if I want to be more diversified, I can always buy an exchange traded fund, for example, the S&P 500, which is around the top 500 companies of the USA. So instead of relying on 1 or 2 companies, I can be more diversified and buy an index that invests into multiple different companies. So if 1 or 2 or 3 or 4 actually goes bankrupt, then I should be okay given time. On Trading 212, there is almost a limitless amount of ways in that you can invest, and that's the great thing about a Stocks and Shares ISA. For example, some pensions are invested for you and you have very little choice over, what investments you have, and often pensions can have very high fees. Depending on the broker you use, there could be no commission, for example, on Trading 212. However, it's very important to note that, other fees will apply, for example, the fund manager fees, FX fees, and things like that. So like I said, within a Stocks and Shares ISA, you can buy stocks and shares, or you can hold cash as a strategy, but I wouldn't recommend this long term personally. So this is the Trading 212 cash ISA, and unlike the Stocks and Shares ISA, you can only save in cash. The big difference between the cash ISA and the Stocks and Shares ISA is that with the cash ISA, your money is more secure as it's put into banks banks which are regulated and your money isn't generally under any risk. This typically will also mean that you are getting paid less interest. However, if you do any research, you will know that stocks over any significant period of time have greatly outperformed cash. So if you want long-term savings or to build long-term wealth, the stock market is one of those no-brainers. However, of course, when you're investing into anything, your capital is at risk. The value of your investments can go up or down, and sometimes you can lose all of your investments. There are ways in which you could actually reduce this risk by investing into a diversified portfolio. That is one way. But of course, anything can happen in the stock market. I'm just making you aware of that. Now, one very major benefit of a stocks and shares ISA is that you don't have to do a tax return for any of the investments within a stocks and shares ISA. Now, this can free up hours and hours of admin. I know I do a lot within my stocks and shares ISA, and you don't have to declare anything in that. The ISA itself is a tax shelter, whether it's the cash ISA, the stocks and shares ISA, the innovative finance ISA, or the lifetime ISA. Everything within that ISA can grow indefinitely, and that's the best part about it. Now, speaking about other ISAs, for example, cash ISA, innovative finance ISA, lifetime ISA, or stocks and shares ISA, they all share the same £20,000 maximum allowance. This means that if you have maxed out your cash ISA, you can't then put any more in that tax year into the stocks and shares ISA. With the lifetime ISA, the maximum amount you can put in is actually £4,000 per year, so it frees up another £16,000 that could potentially go into your stocks and shares ISA. So within a stocks and shares ISA, any capital gains is free from tax. For example, in my stocks and shares ISA, I have realized over £15,000. This all remains tax-free. In terms of dividends, I have received over £1,600 in dividends. This also remains tax-free. Now, let's talk about some of the most common ISA misconceptions or mistakes. Now, the first one is not knowing about different types of ISAs. Like I briefly touched on before, there are 4 main different types of ISAs. So if you deposit into your other ISA for that same tax year, the stocks and shares ISA will also share the same allowance. On Trading 212, it gives you an overview of how much of your tax ISA allowance you have used, for example, the cash ISA or the stocks ISA. However, like I showed you, I have a stocks and shares ISA elsewhere, actually 2 elsewhere, and I've actually maxed out my stocks and shares ISA allowance. One of the mistakes or misconceptions is that Trading 212 will somehow know that you have deposited within another broker. They actually do not know this information because it's not freely shared. So it's your responsibility to manage your own £20,000 per tax year allowance, which runs from April the 5th of the current tax year to the next year's April the 6th. Now, another massive misconception with stocks and shares ISA is that the maximum amount you are allowed to invest is £20,000. Now, this is confusing because we always say it is the ISA limit, but it's the limit that you can actually put money into your stocks and shares ISA per tax year. As you can clearly see, my stocks and shares ISA with Trading 212 is worth over £100,000. So clearly the limit isn't £20,000. Neither is it £20,000 per tax year. It's the amount that you can deposit. You can deposit £20,000, and if you're lucky enough and it goes into £1 million after 5 years, then you are allowed to have £1 million in your stocks and shares ISA, for example. Another misconception is that you can only have one stocks and shares ISA at a time per tax year. This is absolutely not the case anymore. It used to be the case, but like I showed you in the beginning, I have 3 ISAs right now, and I've had more in the past that I've closed. So as long as you don't exceed your £20,000 ISA allowance between all of your ISAs per tax year, you can open as many ISAs as you want. You can also open up an ISA even after you've maxed out your ISAs and then just leave it there. There's actually no harm in doing that. You just can't deposit even a penny in that. If you have accidentally made the mistake of going over your ISA allowance, it's best to contact your stockbroker immediately. I've actually done it this year and they've sorted it out really nicely, so I'm happy with that. They also notify HMRC, and usually what they will do is that they can void that ISA for that year. So it's actually not the worst mistake ever as long as you correct it straight away. Otherwise, you may have to pay tax on the extra amount. Another mistake some people make is that they think the stocks and shares ISA itself is an investment. So the stocks and shares ISA itself is just an account. Essentially, it's like a shopping trolley. Imagine someone told you that they will give you a shopping trolley. Whatever you put inside it, they'll pay for it. That is what the stocks and shares ISA is. On its own, it's nothing. So you have to pick your own investments. Now, when I first started out with my stocks and shares ISA about 5 years ago, I saw that the value was going up each month and I couldn't really figure out but that was just the interest on the uninvested cash. Obviously, I quickly learned that I had to pick my own investments, but when you're investing, of course, there is that risk. If you're risk averse, maybe go for the cash ISA. Now, another very common mistake that I get questions about all the time is what if you started out investing and you use the wrong account type. For example, if you've just started out investing, especially on Trading 212, you may have opened the Trading 212 Invest account, and this is not tax sheltered like the Stocks and Shares ISA. Now, in this case, there may be instances where you have to pay tax. For example, if you've realized a gain over £3,000, or if you've received more than £500 in dividends. Usually, most people spot this mistake very early and they don't have enough invested to make a big difference. The £3,000 capital gains allowance is kind of generous, so actually, most people will still not have to pay tax even investing outside of an ISA. But for long-term wealth generation, it makes more sense to put that money into the Stocks and Shares ISA. Now, another big mistake that people often make is that they do their ISA transfers themselves. For example, they want to go from, let's say, Hargreaves Lansdown over to Trading 212. So they withdraw everything from their Hargreaves Lansdown Stocks and Shares ISA into their bank account and then try to deposit into their Stocks and Shares ISA. This is going to affect your Stocks and Shares ISA allowance, because when you take out that money from Hargreaves Lansdown, for example, HMRC sees you withdrawing your ISA and then trying to put new fresh money into your Trading 212 account. So please don't ever try to do that. If you do want to transfer your ISAs, which is completely allowed and won't impact your ISA allowance, please go through the internal transfers process that you can find on your stockbroker. So on Trading 212, if you press the 3 horizontal line menus over here and then go into the menu called Portfolio Transfers, here you can actually transfer in or out. As you can see, I've already done this with my Invest Engine Stocks and Shares ISA. Now, if for some reason you've actually withdrawn all of your money by mistake on Trading 212 and you are very worried that you've missed out on your Stocks and Shares ISA allowance, well, luckily now Trading 212 offers a completely flexible Stocks and Shares ISA and cash ISA. This means you can withdraw all of your cash or some of your cash from your ISAs, and as long as you return it back in the same tax year, this will not affect your Stocks and Shares ISA allowance. This is a very welcome addition. I've seen many other stockbrokers actually implement it, and this could be a game changer for people who accidentally or prematurely withdraw funds from their Stocks and Shares ISAs or cash ISAs. So make sure to check out some of my other videos, and I'll see you in the next video.